Welcome back to Street Level Marketing, where we're real people talking about real marketing strategies. We're on with Nick Boatman from Poplar Wellness. We've had a pretty good show here over the last 45 minutes, and I wanted to wrap up the segment, talking about you got a business now, you're trying to grow, and you're thinking about now it's time to raise some capital to grow more. Sometimes those pigeonholes come up where you gotta raise more capital to expand the business and reach more customers. So Nick, have you been into this process yet to where you're going out and raising money? When did you determine that it was time to do that?
Yeah, it really depends on where you're at with the business. I've raised a lot of capital in a lot of different situations. And, as an entrepreneur, especially if it's your first time business, there's a lot of different routes that you can go. You could go on Kickstarter and raise that. You can find angel investors and different areas that you can go and pitch your idea with some investors to try to get them to throw capital in it. But if you're first starting, what I would always recommend is, first off, you have to have a strategic business plan and you have to have a performa. It has to be written out on paper, because any investor, it doesn't matter what the business idea is, they're going to flip right to the back and they're going to look at the margins. They're going to look at, is this a worthwhile investment? How much potential is here? And also remember that people are always, especially me, this is the way that I think. I'm betting on the archer, not the arrow. It's the people that are behind it that I'm betting on. So, if you're first starting out, I always recommend to, try to go to family and friends or some strategic partners or somebody that at the beginning to get it off the ground. Like I said, you can go the other routes, but make sure that you get enough capital to get it to where you need to go. Don't go short. If anything, tack a little bit more on. And it's about proof of concept at first. So you got to prove your model. You got to prove that whatever you're selling is going to be successful in that market. And once you've done that, everything's off your financials, right? It's off EBITDA. They're looking at your revenue versus your net income and where the potential of this can go and what your next moves are. So once you get it to a certain level of EBITDA, right? Once you get the company worth enough to where you feel like it's taking it to the next level, it's different for everybody. That could be $1 million in EBITDA. You get enough cash flow depending on where you're at. Then that's the next level, is when you start talking about private equity or you start talking about seed funding. But if you go to them too quick and your company's not worth that much, either A, they're not going to be interested, which they're probably not. Any big boy is going to want to see the company at a certain point on your EBITDA before they're even going to look at you. But you're going to be giving up too much of the company. If it's not worth that much on paper, then you're going to give up a massive chunk and you're going to have a much smaller piece. So that's where the archer is so important. Like, if you are a true entrepreneur and you want to succeed, you have to put your nose to the grindstone and you got to get it where it needs to go. And it's tough. I mean, you got to put in the work. Sometimes it takes years to do that, but you have a choice. Either, you're waking up and you're working for somebody else to help them chase their dreams, or you're chasing your own dreams. And I promise you put that work in at the beginning, at the end, it's going to be well worth it. And you're going to have that freedom to do what you want to do when you want to do it.
So when you're doing this, we're going back to the marketing plan. Is it important to make sure you have a really structured uh, plan in place when you're going to raise that money? Are you going to have to show where you're going to spend and allocate the money that you're raising? Do you have to put a lot into the market share that's available to you and how much you can potentially capture of that?
Sure. I mean, you want to have all of those things. And again, it's about having a detailed plan. Your strategic plan, it's who you are. It's a SWOT analysis. It's looking at your competition. It's uh, the market size, the market cap, where you're going as an organization. What is your purpose, right? What is your mission statement? Who are you? It's outlining those things. And then in your performa, it's showing exactly where you're going to allocate every dollar to a T. If you're going to get paid, that's on there. If you're going to spend it on marketing, that's on there. What do you need for software? What do you need for infrastructure? What do you need for inventory? How often are you going to have to buy inventory? At what point? Every detail that you can think of needs to be put in there and project out, right? So try to do a couple of years, 5 years, I would say, on what that looks like. And, you know, you want to get as detailed as you can so people can buy into that vision and also understand what that company could be. And again, looking at the Archer, I want to know if I'm investing in somebody that there's laser focus, there's a hunger there, and this is, something that the people behind it are really passionate about. And if I see a plan and I see the structure, I see the potential, and I say, you know what, this could work in this market, and I really like these people. These people are behind this. That's a product or a service that I'm going to think about investing in.
So you say you're in what, 12 centers now?
Yes.
Where do you see yourself this year? Like, what's the plan that you have? What's your goals? Where do you see the company, say, going into 2026?
Yeah. So, the goal for this next year, we're raising a little more capital. We're going with strategic investors, right? So we're giving away a piece of the pie, but if we hit certain markers, right, on our revenue, and we get it to certain points to where the investors paid back, we can then buy back that equity. So there's some different strategic structures that you can use. And again, Mark, like we were talking about earlier, use ChatGPT, use AI. They'll tell you all about creative ways to do that. But our goal on this next year is to have a $2 million EBITDA. And we have some advancements that we're going into. So we have a new wearable that's coming out. It's called our wellness wearable. It does all types of biomarker data. It tracks sleep. It can do ECG with your heart. And people can wear that through a full continuum of care, and then they can wear it when they come home. So we have a full telehealth and telemedicine platform, and we want to be able to fill some gaps where we can treat people for life and keep them connected with chronic care physicians, right? People, they might be a diabetic, or, they could have a thyroid disorder. We want to be able to treat that through telehealth, through your doc on our app, your medication management, therapy. You might be connected to, your alumni of the treatment center that you just went, but everything's in one spot. It connects to our wearables. It connects to everything, to where when somebody leaves, we can help treat you for life.
When you're talking about those strategic investors, that's one thing that is probably pretty important to determine when you have potentially you have a lot of people interested in putting money in, is picking those investors that can maybe provide some doorways to open. Is that something you're looking at when you're choosing these investors?
100%. We are in a market right now in healthcare. It's a very large market. It's also a tech company, right? So there's huge multiples in this field if you make it successful. And everybody's on the AI train. We have partnership with a big university on data collection right now. We're working on white papers, preventative algorithms. So in order to get there on raising the capital, we got a lot of people that are trying to throw money at us, but it's about, again, who we're going with, because people are everything. And we can go get money from somebody that wants to throw it at us, but it'd be a lot better if we got money with somebody that could help offer something to advance our company, right? Whether that's relationships. I'm always looking for people that are way smarter than me. I better not be the smartest guy in the room, and everybody around me, I want smarter than I am. And that's what it's about. Show me your 5 friends. Show me the people that you're surrounding yourself with. Same thing in business, an investor, because they'll take you farther. They'll give you advice. We don't know all the answers, but the people that are behind it and the people that you do get capital from matter a lot.
Yeah. Well, I want to thank you, for being a guest on the show. It was really good to hear about Poplar Wellness and, you know, you starting the business, some of the marketing challenges you had. For the listeners, if they want to be able to find you, what's the website? Is there a phone number? How can they reach you?
Sure, you can find us online. It's poplarwellnessgroup.com. Poplar is a tree, it means resiliency, Poplar wellnessgroup.com. Or you can just call us at 888 Poplar. If you need any kind of help with addiction, need a resource, struggling, we can help you in any way possible. Visit us at discoverynj.org. That's discoverynj as in New Jersey.org. And even if we're not the right fit, I've been through it. So many people I know have, and pick up the phone, give us a call. I promise you it'll change your life.
Thank you so much, Nick, again for coming on the show. It was a lot of great information, and hopefully our listeners can maybe pick up a few tips on, how they can go about starting a business and being successful in that venture, and then marketing it and getting it out to customers so they can grow. Um, Thank you for watching another episode of Street Level Marketing. I'll see you next time.